Dan Ives of Yorkville Ives writing, we expect robust results from Nvidia, which will be key to the tech trade going higher into year end. Dan joins us now for more. Dan, good morning.
Great to be here.
What's getting more expensive?
Look, memory. I mean, look, the reality is that we're seeing a memory super cycle take place, and I think that's the word all around Korea, and that's why Nvidia, they're going to need to pass some of this to their customers. But that's not slowing down, because the reality today, demand to supply for chips is upwards of 15 to 1. And I think that's what, not just Nvidia, but ultimately their end users.
Who needs to eat the higher costs right now? Who's eating it?
Now, through the supply chain, you'll see some of that eaten, but then ultimately it's the end user, it's the customers, it's enterprises, it's tokenization. As that all plays out, then the question will be, okay, when do you hit some sort of equilibrium? I mean, we don't think you hit core equilibrium probably till middle to late 2028. And I think that right now is a quagmire, whether it's Nvidia, whether it's the memory players, Micron, everyone else, because the hyperscalers, just like as Lisa talked about, as they'll continue to raise capital and CapEx will continue to increase, the AI revolution is still in the third inning, and I think you'll hear that more from Nvidia later this week. Then it comes down to like memory, and Apple obviously seen that front and center. Those costs are going to continue to go up.
They're going to look for other costs to go down, though. And I was looking, for example, at the story over the weekend of Nvidia potentially telling some of its customers, like Microsoft and Alphabet and Oracle, that their costs are going to go up about 15% tied to data centers because of the memory chip and how much the price is going up. And you start wondering, is this part of the reason why they're cutting back on frontier models? Is this part of the reason why they're looking for efficiencies from, say, open-sourced AI models coming from China?
Yeah, and that's why when you look at Apple and they looked at chips potentially from China, because they're looking across the board and say, okay, where do we cut costs? Because on one side of the ledger, costs are going up. But it speaks to our view that until you really hit scale, costs are going to continue to go higher. I think with the hyperscalers and with the chip players and from Nvidia, what everyone's dealing with is you cannot take the foot off the gas right now because of the demand cycle. And to your point, when it comes to like the debt raises, despite what we're seeing, that's going to accelerate. I mean, you talked about it going to 220. You go to next year, it's probably double from that, in terms of as it's going to continue to increase, given the CapEx that's needed. In terms of what I'll view it as building Vegas Strip 1955 type movement.
I was looking at Nvidia's earnings and just the returns that you've seen in their shares. So far this year, their shares are up 15%. Last year, they were up 38%. The year before, they were up more than 100%. The year before, up more than 200%. It's been a rapid deceleration in the equity returns as multiples have gone higher and higher. At what point have they just reached a pinnacle of what multiples can look like? And even if they deliver amazing results, they're not going to get that kind of pop in the stock.
I think that's the debate, but then to some extent, they've almost funded the AI party. I mean, if you think about the memory play, look, think about Korea. Kospi's not where it is without Nvidia. There is only one chip in the world fueling the AI revolution, that is Nvidia. And I think the point here is that as you see with numbers as it plays out, there's no one that has a better perch than them. And that's what I think you'll hear from Jensen, because the question is as enterprise accelerate, and we think it could accelerate in probably 20-25% even over the last few months, as that runs through the system, it's investors ultimately recognizing that, because it's my view investors are still underestimating the scale and scope of the AI revolution. Now, it goes back to like the bond market, and you're going to need to take out more debt, and then where is there a patience, sort of a tug of war that goes on. But from a demand perspective, it's accelerating, not decelerating.
Earnings look great. Are they as good as they look? Lisa's asked this question before. Bloomberg subscriber wrote in just moments ago and asked the following question, whether this is just about accounting tricks. The question directly is, someone's CapEx, which gets depreciated over many years, falls straight into someone else's top line, recognized instantly. No one predicted this earnings boost because no one thought this through. Not one single sell-side analyst. What's your response to that?
My response would be look at Palantir earnings as a good example of just forget CapEx. enterprises signing on the dotted line to ultimately accelerate their AI initiatives. If you look at Microsoft's quarter, that was a perfect example of what's happening to that. Just forget CapEx for a second. What are their install base, their enterprises saying? What they're basically saying is bright green light to go down the AI path. So when you go down to the CapEx and the circular financing and they're investing in there, and everyone needs everyone else to ultimately be positive in terms of OpenAI and Anthropic, I think it gets away from just the core demand. And also for every dollar of CapEx, there's a $5, $6 multiplier.
It's not to imply that the earnings aren't there, they're not that great. I'm just implying that they're not as good as people might be saying they are. Is that fair?
Look, I would say 6-9 months from now, they have to continue to execute and prove themselves out. And if they don't, then the stocks reflect that. But I think right now, that's why look, this is all a Jenga puzzle. From Palantir to Nvidia to Microsoft to OpenAI, Anthropic, you got to put it together to understand what's ultimately happening. What I would just say is, from an Asia perspective and what you've seen with demand's accelerating. That's why prices are going higher, and that's something that's bullish for the overall tech trade.
Dan.